I want to cover, which is really going to set the stage for the rest of this video and the developments over at Ripple, is the fact that the SEC is continuing to drop their unlawful and unfair investigations into Coinbase, Robinhood, OpenSea, Uniswap, Gemini, MetaMask, and even the founder over at Hex, Richard Hart, which is absolutely insane. In other words, they are taking a 180-degree turn. The real question is, when will this happen for Ripple, as it is the longest standing and the most prominent legal battle that will really set the stage for the entire crypto market. Many people believe this will not only pump the entire crypto market, but most definitely XRP to new highs. And as we get all of this DeFi institutional stuff in play, this could easily 10x an XRP portfolio. Now, I understand that we have been really bearish recently all over the X timeline, and many people want to know whether or not this bull run is truly over. I did make a mention of the fact that their line of least resistance is currently and technically down, as we touched one last time that $1.95 to $2 range, which would complete our head and shoulders if we were to break down below. This was our last line of support before something really bad happens. That said, all of the positive developments lead me to believe that this might have been our local low and bottom. That doesn't mean that I'm not being cautious. It simply means that price action is king. The price is the price is the price. And so no amount of good news will eventually drive the price up if the line of least resistance or the trend is down. So ultimately, I do want to be very cautious and just say that although I do believe that if this is our local bottom, we are going to make some insane new highs through the end of May, or into May, I should say. However, I will be adding to my positions as I see the market recover a little bit more. Either way, I think this could possibly 10x our bags through the end of 2026. Still, alongside all of those dismissals, we do need to see a dismissal as well for XRP. Now, this lawyer believes the SEC's unexplained delay in dismissing the Ripple case is actually not due to the SEC, but due to Ripple. And this would totally make sense because Ripple might be negotiating all of Judge Torres's decision, because at the end of the day, they basically stated that XRP is not a security, which sent the price pumping pretty hard only to dump right back down to where it started. But they also found some bad boy provisions which are not great for Ripple, like it was considered a security when they were selling it to institutional clients, and the fact that they would have to pay a $125 million penalty for those issues. That said, he said, I believe the SEC would be accepting a settlement where both sides dismiss their appeals and the SEC takes the $125 million penalty in a heartbeat. Now, this would actually be really important for Ripple, because if they want to IPO, they have to be 100% in good standing under the law, and they can't have these types of things on their record. So the only reason that we might not be seeing the SEC drop the suit completely is because XRP wants more favorable terms, or I should say Ripple. Still, with what we're seeing right now with all of these other companies, it leads me to believe that the SEC is going to play ball with Ripple and is actually going to give them very favorable terms, because they are experiencing pressure from the current administration to be on top of things when it comes to crypto. And so once this is all water under the bridge, what's really exciting is the fact that Ripple is moving full steam ahead with their institutional products and getting institutions to adopt these products, because they are bar none the best in the space, especially when it comes to crypto and blockchain. That said, we have a lot of things to talk about in this article, so I'm going to try to hustle through them and make them as easy to understand as possible. Now, one thing that they have worked on improving is their automated market maker, which is what you call an AMM, and this is basically an algorithm that allows for different products to be traded against each other in an automated manner. That said, they also developed an AMM clawback, which we've talked about on this channel before, which enables an issuers to claw back funds from a trust line in specific circumstances. So this is still decentralized. However, if there is a large vote of all of their validators that there was fraud here, then they will be able to recover stuff when it comes to account access or malicious activity. This is important when it comes to institutional clients, because at the end of the day, there will always be fraudsters, and at some point in time, we need a way to regulate that. So this is great for institutions, and ultimately it will allow for institutional liquidity provisioning. It will allow for tokenized real-world asset trading. So when you really think about this, previously illiquid assets such as tokenized treasuries and even real estate, which are huge markets, can be efficiently traded. And it will even allow for more interesting products or opportunities, I should say, like arbitrage and cross-chain swaps, ensuring pricing accuracy across different DeFi ecosystems with their Oracle. Now, they're also going to be including the XLS40, which is decentralized identity. This feature enables self-sovereign identity, allowing users to establish verifiable identities without relying on centralized intermediaries. This is the beauty of crypto. We no longer need intermediaries, which makes things not only more affordable, but it truly makes things trustless. We no longer have to trust other parties, so we can trust the blockchain. However, by leveraging DIDs, institutions can enhance security, privacy, and compliance while maintaining decentralization. And the key word here is compliance, because ultimately that's all regulators care to see. If you're going to be adopted by institutions, they need to be compliant. So this will allow for KYC and AML. This will allow for permission finance and access control that only certain entities providing on-chain credentials can access. And finally, institutional onboarding will be a lot simpler because they're going to streamline the process of identity verification for all sorts of these different applications like bonds or real world assets and real estate. And things just keep getting better and better for the XRPL as they drop their entire 2025 roadmap. And so they're really taking a focus on institutions with compliance first, and then lending and programmability for their institutional clients. Because a lot of these institutions, although they might have really smart developers and programmers, at the end of the day, if these systems are not easy for them to use and integrate into their older stuff, their dinosaur technology, they're simply not going to use it. And they might build their own from the ground up when they could just use the XRPL. And so everything they're doing here is so exciting, because yes, they will be offering tokenized bonds and grade asset management or even institutional lending markets. And of course, their stablecoin will be integrated into the entire mix, offering a lot of that value, or better yet, bringing a lot of that value into the XRP token, because the XRP token runs the entire XRPL. And so why stop there when it comes to their business model? Why not offer all sorts of products for all sorts of institutional clients, even if they don't want to use the XRPL? Why not offer institutional grade crypto custody? That is something that already Coinbase does for all sorts of ETFs. But what if institutions didn't have to have a bunch and they only needed one where they use everything? And that's exactly what they're talking about, as 96% of institutional stakeholders see digital assets as an important diversification opportunity now. Maybe they just haven't entered the space. This is a $20 trillion opportunity, which is predicted to grow nearly 3 times faster than that of the traditional banking sector. It's absolutely insane. And guess what? Ripple Custody is now the comprehensive enterprise grade solution that will really focus on the majority of these institutional clients and making sure that they are above board when it comes to compliance, but also extremely safe and still have access to their crypto. Now, this will play nicely into this entire business model, because at the end of the day, more and more money is going to be funneled into the XRPL and into their product offerings, and a lot of that value will find its way back to the XRP token. They're going to earn a portion of fees for every single thing that they custody. This is truly brilliant, and I believe they're making the right moves right now before mass adoption really comes into play.